Welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. Today I'm going to disclose to you exactly the securities that are in my $49,360.48 Roth IRA. So before you guys make fun of that amount, whether you think it's low or high, some of you might be saying, I have money in my mattress that's worth more than that. Let's talk about when I actually started investing in this Roth IRA. So I'm relatively young, I'm in my early 30s. I started investing in this in April of 2012, okay? So after I stopped working at the car dealership, I got a big boy job with a startup company and I paid off all my student loans. I didn't have any debt, knock on wood. And what I did was I said to myself, okay, I'm gonna start maxing out this Roth IRA. So what I've contributed since April of 2012 is roughly $39,000 of after-tax dollars, okay? So very quickly, this video is not going to explain every nuance of a Roth IRA and what it is, but just for the people out there that don't know, a Roth IRA is simply a tax advantage retirement account to where you can invest after-tax dollars. So when you get your paycheck, your gross pay is, let's say, $2,000 a month. Well, that $1,500, that's after all the taxes have been paid out. That's your net pay. So this $39,000, you can look at it as my net pay throughout the course of my life. That's what I've invested. So obviously you know that right now I'm sitting on roughly $49,360 at the time of this recording, which means it's grown roughly $10,300 over those years. So the things that I'm going to show you, I've spent hours, I've burned the midnight candles, I've just poured over Excel spreadsheets and taken days, if not weeks, off my life to make sure I have the perfect Roth IRA portfolio. So what has enabled me to get this roughly 7.4% annual return? Here it is, you guys. You ready? I'm going to write down every single stock and every single security that I hold in my Roth IRA. There it is. This is VFFVX. This is the only thing I've ever owned in my Roth. It is a 2055 Vanguard Target Retirement Fund, okay? So the way this works is that it's simple. So for those of you that want these big, complicated Roth IRAs or these retirement accounts where you have complete control, you know exactly what you're buying and what you're doing, more power to you. Me, I believe life is a little bit too short to do that, and I do my own investing on the side. So this isn't talking about my own personal stock portfolio. This video is just about my Roth IRA. I've only ever owned VFFVX because it's simple, okay? It's simple and you forget about it. All I have to do is contribute the maximum, and it's grown and it's done what it's needed to do over these past 7-8 years, okay? So what a target retirement date fund is simply you choose or you estimate when you're going to be of retirement age. So this one actually covers if you're going to be roughly 65 years old between the ages or between the years of 2053 and I believe 2057. Sorry, I know that doesn't even look like a 2. That's why it's called a 2055 Target Retirement Fund. Okay? So take a look at this screenshot, you guys, and I'll explain to you exactly what is included in this fund. So you can see here that it contains 4 funds. One is the total stock market index. The second is the total international stock index. The third is the total bond market index. And the fourth is the total international bond index. And you can see exactly how much of each percent weights this portfolio, okay? So the numbers that are highlighted account for the 2055 target date retirement fund. As you can see, if you go to the right, these people that are retiring in 2020, you can see how their portfolio is weighted much differently and it's much less aggressive. The target date fund, I like it because you can see that it's inherently risky up front while you're young, and then it ultimately becomes less risky as you get older. So if you, I'm not going to go more into depth on that picture. If you want, rewind the video and hit the pause button. I highly recommend you check that out so you understand how this works. So one of my favorite pros about this target date fund from Vanguard especially is that it has an extremely low expense ratio, okay? So when you guys are looking at different options and different funds and mutual funds and all these different investments, you need to look at the expense ratio. So I know this doesn't look like a big number. This is literally 15 basis points. It's basically 15% of 1% is the amount of fees they take, okay? So I'm gonna show you a screenshot here as well. So take a look at this chart right here. You can see that the amount you have invested is going to be right in the middle, and that's the value of your retirement account after 30 years. If you take a look at what the investment fees are on the left, you can see that just these minor increments in percentages, look at the difference they make on the amount lost to fees over the course of 30 years. So you can see why I really like Vanguard, because the expense ratio, again, is 15% of a percent, as opposed to some of the other things in the chart that I just showed you. Basically, the account value after 30 years on someone charging 2% is much less with the same rate of return than a fund manager that's charging relatively this amount, okay? So keep in mind that my Roth IRA is not going to be my only means of income or source of income when I retire, but this is going to be my very conservative nest egg. So going back to some of the pros of this is that it's inherently risky when you're young, okay? So I know we kind of touched on this earlier in the video, but I do want to spend some time on this. When you're young, you have the ability to make up losses, and you have the ability to make up up markets and down markets to where it's kind of smooth out by the time you're done investing, okay? So if you think about it, when you're young, you can afford to be in 90% stocks, which are more inherently risky than bonds, as opposed to someone whose portfolio may be 20% stocks, 80% bonds. Now, if you remember that chart earlier in the video showing you the different distributions and weight of the portfolio, the people who were retiring in 2020 or 2015, their portfolio is going to be weighted much more conservatively because they're older. They don't have as much time, you know, God forbid, they may die quicker or something may happen to them. So they need to have that nest egg be more protected from volatility in the market, if that makes sense. So the one con about this that I can identify other than just the expense ratio is that you have a lack of control. So I was kind of poking fun about the people who kind of, you know, live in the stock market and pick and choose every single penny that goes into their Roth IRA, as opposed to someone with my style who literally just maxes it out every year and forgets about it. So I will say that that's actually a double-edged sword as well, because the people who are overly picky are always going to be trying to, you know, listen to their buddy in the locker room and get the next hottest stock tip and all that, which I would not recommend doing, especially in a retirement portfolio. You can do that in your own investing portfolio. So there is lack of control. Again, this is just made up of 4 funds, but it's a big basket of stocks in those 4 funds, okay? So you get a lot of diversity, and it's gonna be smoothed out whether the market is doing good or bad. So there you have it, everybody. I know this wasn't an exact scientific video of how to invest and exactly what to invest in. Again, my videos are just meant to shift the paradigm in your head and give you different ideas and different flavors and more tools in your financial toolbox. So again, I'm probably going to invest in this fund probably, you know, till I croak, and who knows who's going to be inheriting this account, or I may spend it all. I may just buy, you know, another BMW or something, or an apartment building. The beauty of the target date fund, again, is that it's simple. It's always adjusted for risk based on your age. And although you do have some lack of control, it more than makes up with lack of fees as well. So in my opinion, if you're a beginner and you want to invest in a Roth IRA or even in your 401k if you're able to, I highly recommend taking a look at target date funds. Thank you so much, and if you got value out of this video, please share it with one friend. I would really appreciate that. Thank you so much, and have a prosperous day.